Some disappointing earnings from big tech so far. Alphabet, Meta, Tesla, all slumping since their respective prints. What's in store for Amazon tonight? That's the focus of today's Tech Check with Deirdre Bosa. Hi, Dean.
Hey, Carl. So the past few days, they have not been pretty for big tech, but don't let that fool you. This is not a fundamental story. Google told us the advertising market's resilient. Meta told us that it can balance massive costs with profitability. And Microsoft showed the street that it can monetize AI in the cloud. Now, this is all in their earnings and revenue growth rates this quarter. We'll show you them now. It's hard to find fault with double-digit top-line growth, 40% earnings growth at Google, and Meta doubling its bottom line over the last quarter, except to say that these may have already been baked in. Meta shares have more than doubled this year. Alphabet and Microsoft, they're each up nearly 40% year to date. The weak stock performances this week, at least of Google and Meta, they're more an effect of the broader sell-off in equities than they are a cause of it. And part of that is the yield-driven rut that's affecting the market as a whole, which has investors asking, why take a chance on risky stocks when safe bond yields are similarly priced? Now, this all raises the stakes for Amazon tonight. It has been a mega cap laggard, slowing cloud growth, its costly logistics build-out, playing catch-up in AI. So the bar is arguably lower, but it will still need to balance what we talked about a week ago heading into this earnings season, and that is the promise of AI versus the economics of AI. Its cloud unit, AWS, that is still the profit engine of the company, and it helps pay for those AI ambitions. But revenue growth, as you can see here, it has been decelerating for 6 straight quarters, and operating margins have shrunk. Now, the street tonight wants to see that that slump has bottomed. If Andy Jassy and its team cannot confidently say that it has, and then it's back on the upswing, Amazon could be another mega cap drag on the market with that outsized effect. Now, key also to its fundamental story, Amazon will need to guide for a strong holiday quarter ahead, and that rests largely on its e-commerce business. No shortage of shopping holidays. We've already had a Prime Day. We've got Cyber Monday, Black Friday, and more holiday shopping seasons coming up, guys.
Dee, it's a week where, the slowdown in Google Cloud, but the resilience of Azure kind of held this debate about why is it only raining on one side of the street, as Kramer liked to say. I wonder if AWS kind of breaks that tie.
Yes, mixed signals. And here it's important to keep in mind that Microsoft's cloud unit is still a lot bigger than that of Google, and it's more tied into its core proposition to serve enterprises. In that sense, Microsoft is probably a better indicator for an Amazon because Amazon is building all of its AI products into the cloud. So what I'm hearing as well is that we need to return to that double-digit growth. If AWS revenue growth is at 13%, that's going to be great news for the markets. If it dips below that, 12% comes in at 11% or so, that is going to spell trouble. But again, those mixed signals. Google said that they saw customers optimize for spend. AWS could go either way. Remember, it is the largest by far of the cloud giants.